the Financial Survival Network. Now more than ever.
And welcome. You are listening to Watching the Financial Survival Network. Hey, tomorrow is election day. And is it important or is it irrelevant? Debt is going to be there before the election, and it's going to be even higher after the election, and higher still on Inauguration Day. So what's with it? Well, let's talk with John Rubino. So a red wave is coming on Tuesday. I don't know if that's a wave of more debt or that's a political realignment, John.
Hey, Kerry, it's both, because it looks like the Republicans are going to take back at least one legislative house. And that means the government will be kind of sort of hamstrung for the next couple of years, which is, in the scheme of things, it's okay. I mean, if they can't do much, they can't do much damage. So that's probably on balance good news. Yeah, but as far as the other red wave goes, which is of debt, that's not going to change. We're still running $1 trillion deficits as far as the eye can see, and so is everybody else in the world. So the idea that there's some Fed funds rate or 10-year Treasury yield rate or immigration policy or abortion policy that fixes our problems is ridiculous. We're going to continue to pile up ever greater amounts of debt with actual consequences now because interest rates are up. So, as debt rises, the debt that has to be rolled over is rolled over at a higher and higher rate, and our interest costs go up at basically every governmental level all around the world, with the possible exception of Russia, which doesn't have much debt. Everybody else is looking at national bankruptcy now. The U.S. already has an interest cost at the federal level that exceeds our military budget. And that's with the vast majority of our relatively short-term debt not yet rolled over at today's higher interest rates. So we're looking at a potential doubling of that $700 or $800 billion a year interest cost over the next 4 or 5 years. So we're going to be well up into the trillions each year just for interest. And then that will be borrowed, which will accelerate the amount of debt that we're taking on. So this is a death spiral for the world's fiat currencies. And there's, at this point, no way out of it. The Fed is committed to raising interest rates for a little while longer and then keeping them higher, which I don't think they're going to be able to do. There will come a point when they shift gears again and go back to easing. But they need massive financial sector pain for that to happen. And so here's the kind of catch-22 that we're in now. The stock market and the bond markets, to an extent, expect the Fed to capitulate pretty soon. But the Fed can't capitulate until the stock market capitulates. So we're both stuck with these guys who need something from the other and are in really no danger of getting it anytime soon. So we got this death spiral, as I said, that's going to continue until one side breaks, and that'll just make things worse. So yeah, we're past the point of no return.
All right. So Nick Santiago says that they have to get the Fed funds rate up over the or close to the 2-year Treasury rate to get rid of the inversion, right? The inverted yield curve. So right now, the 2-year Treasury rate is at 4.66, and it's actually down from the previous day. But get a load of this: it's up from 0.41% last year, the 2-year Treasury rate. And that's huge. That's a over 10-fold, it's a 12-fold, 11-fold increase in rates in just a year. I mean, that is, the long-term average is 3.15. So they're going above that. You always have to go back to finances. This reversion to the mean, right?
Yeah, sometimes it takes longer than other times, and this is one of the longer times. But yes, the government's borrowing costs are soaring if it plays out the way Nick Santiago says it's going to. But everybody else's interest rates key off of these government rates. Car
Mhm.
loans are now apparently 10%. If you want to buy a used car, and mortgage loans, 30-year fixed rate mortgages are like 7% and change now. Remember 2.5% mortgages in the very recent past,
Yeah.
and so all of a sudden, a house that is the same price that it was 2 years ago costs twice as much to buy in terms of its monthly payments because of mortgages going up. So
Hmm.
um, the um, the reverberations from rising interest rates are everywhere out there, and it's either stifling economic activity or bankrupting huge sectors of the economy, depending on where you look. So I think that the Fed's idea that it can keep on raising interest rates with relative impunity is going to be tested pretty soon when a bunch of these sectors start blowing up. I mean, who's buying cars? Who's buying used cars if they have to borrow money at 10% to do it? Who's buying
Only people
incredibly
that have to
expensive?
have one, you know?
And even then, I mean, how do you afford to drive yourself to work when gas is $5 and change per gallon and the interest rate on your loan is 10%? All of a sudden your expenses are exceeding your income in a lot of cases. And rents are starting to fall, and that could become a cascade pretty soon just because they're so high and people are so broke because of inflation, that Airbnb inventory is liable to
Yes.
hit the housing market pretty soon, pushing house prices down dramatically and pushing a lot of people underwater who took out mortgages in the last couple of years. So there's all kinds of feedback loops out there that are just now getting started that are going to accelerate into just crazy territory. So look for the next year to be baffling to a lot of people and terrifying to a lot of other people. So baffling to the Fed, let's say, and terrifying to everybody who needs to borrow money to survive in the next year.
A Airbnb crash. Now, that is something because we talk about foreign buyers, we talk about cash institutional buyers, but one thing that nobody really, I can't find any data is uh, the actual number of short term vacation rental owners, investors. And those are people that basically might not be as financially sophisticated as the rest of the population, but shares of Airbnb are way, way down, right? Uh, and that might be the best indicator of what's going to happen from the stock market. I mean, from the real estate market, rather, from that standpoint, right?
Well, yeah, because Airbnb just reported killer numbers. They exceeded their expectations in almost every way, except for their year ahead outlook, which was brutal. So the stock tanked even on these great earnings because the numbers that are going to come out later, according to the company, are going to be much worse. And that's because fewer people are renting Airbnbs and they're not paying as much as they paid previously, which means the income from Airbnb landlords, a cut of which flows to the host company, is going to be lower going forward. And a lot of these guys who bought rental houses in the last few years at incredibly inflated prices um, are maybe cash flow negative. And that's the sector of the Airbnb population that's really interesting right now. Because what do they do? Are they just going to bleed until they go bankrupt, or are they going to put those houses on the market at whatever they can get? And is that going to push down prices in the rest of the housing market? We'll see. And then you got the private equity guys who've been the biggest buyers of houses at the highest prices over the last few years. So they've been loading
Marginal
up on
buyers,
overpriced houses. Yes, they would swing into a neighborhood, these private equity guys, and buy up the whole neighborhood
sight
at
unseen,
above market
sight
rates.
unseen.
Yeah, yeah, yeah.
Yeah.
So normally in life, that's a policy that leads to bad results. But these guys have been able to borrow at basically 0% rates in order to do these deals. So to the extent that they borrowed relatively short term, they're going to have to roll over the debt that they took on for these houses at 3, 4, or 5%. It's not clear their cash flow is positive at that point. So we might even see some private equity bankruptcies, which would be really, poetic justice. It's time for those guys to get a taste of what they've been inflicting on the rest of the world.
Well, the Fed has the right to rescue these private equity funds because they're non-financial institutions who could have a negative repercussion or effect on the economy. Just going back to Airbnb for a moment, the numbers are spectacular. Their growth numbers, revenue, up 56%, 57% year to year, net income up 655%, EPS up 610%, profit margin up 452%. And, it is a success story. And yet, when you look at the stock, their 52-week high was $212, and now it's selling at 95. And the market knows these things, right? They know
Well,
it ahead of you and me.
when you report those kind of numbers and your stock tanks, your guidance was horrendous, right? That's the only thing it could be. So yeah, the market is anticipating falling rents, falling home prices, dramatically lower Airbnb landlord income, and dramatically lower Airbnb central company income. So, which is what you expect when mortgages go from 2.5% to 7 and change, with no end in sight. So yeah, the housing bubble has burst, and the next year is going to see lower sales, spiking inventory, and crashing prices. So that's how housing bubbles burst. It's a very familiar process by now. We've seen like 5 of these over the last 30 years, and this one in some ways is not as bad as previous ones, but in other ways it's potentially a lot worse because it's part of the everything bubble. When the 2008 housing bubble burst, that was pretty much the main bubble. And now housing isn't even the most egregious one out there. There's several bubbles that are much worse than housing, but housing is still pretty bad. It's going to contribute to the bursting of these other bubbles, I think.
Hey, well, we're in the bubblicious economy, and it's just like you said, one of many bubbles, like used cars, like cryptocurrencies, all these things, like the stock market. I just find it fascinating that I guess we have to adjust that old saying. The last time was when the pole dancer instructor starts recommending cryptocurrencies, you got to head for the exit. I guess now when the pole dance instructor is Airbnb-ing her own home, it's time to get out of the real estate market.
Yeah. Well, and the biggest bubble is government bonds and the currencies that underlie them. And that's what's liable to blow up in the coming year. Think about if Japan has to have 2 or 3% interest rates on their bonds in order to be able to borrow. That blows up Japan's government finances and their government goes bankrupt. But also think about what happens if the Japanese central bank doesn't raise interest rates and keeps creating enough currency to buy up all the bonds that the government is issuing. That craters the currency. So you've got a lot of these countries out there with this kind of damned if you do, damned if you don't policy mix right now, where there's nothing left for them to do that doesn't crater something. And so they're sitting around these conference tables with their bad models and their inadequate IQs, in most cases with central bankers.
Yeah.
And they're choosing which thing to blow up without any real understanding of how they got where they are. It's embarrassing for them. It's terrifying for everybody else. But the euro, the yen, and the US dollar are all basically in the same boat. And there's no pain-free solution. There's only one thing or the other. Do you blow up the bond market or do you blow up the currency? And then
Yeah,
blow up the market. And that's what's coming.
agreed. Agreed. So the leadership in the stock market is switching from tech to energy. At the same time, we're going to have this glorious green energy future. And looks like the market has other ideas about that.
Um, yeah, we're still going to eventually be a renewables energy society, but the process has to happen at a pace that matches the technological progress in things like solar panels. They have to get cheaper and cheaper and cheaper for us to get to a point where it makes sense to go mostly solar, and we're not there yet. Europe found that out,
No.
where
Yeah.
there's which is an interesting choice of a society to make this mistake because there's really not that much sun in Germany, for instance. If you look at a map of relative sunshine between the U.S. and Europe, Western Europe is way up north. That's like New England for the U.S.
Yeah.
And you wouldn't expect them to try to go as totally solar as they tried. So this wasn't a failing of alternative energy sources, which are what they are. They're not a good thing or bad thing, and they're not perfect in any way, shape, or form, but they can do certain things. But they're appropriate in certain places and not in others. And Germany seems to be an inappropriate place. But Germany, they shut down their
Yeah.
coal-fired plants, they
Idiots.
shut down their nuclear plants, they went
Hmm.
whole hog into solar and wind, and it's blowing up on them. So all of a sudden, everybody's having to backtrack and go back to, oil and coal,
Yeah.
things that
Coal, especially, you saw they knocked down a wind farm to build a coal mine. You know,
coal is a growth sector now. Yeah.
Uh, you heard about selling ice picks to Eskimos. Well, try selling an Eskimo a solar panel and see what
Well,
that's going to get you.
yeah, and they're cutting down forests in order to
Yeah.
burn the wood, and so this is just a crazy thing to have had happen, but it has given a lot of luster back to energy stocks. Exxon, by the way, which they kicked out of the Dow Jones Industrial
Yeah.
Average a
Good
couple of
timing.
years ago in favor of Salesforce.com. And Salesforce.com is down by like 50%, while Exxon has tripled since that happened. So that's when we look back on this, that's going to be one of the signs that we had gone way too far in the wrong direction. But yeah, all of a sudden, energy, which used to be kind of a safe haven asset
Yeah.
in the sense that,
Predictable
uh,
dividends,
yeah, yeah, um,
5% growth rate, unless there was reasons why the price of oil went up, shortages. But it's your grandfather's portfolio. Buy
yeah.
Exxon, hold it, and die with it in your portfolio, reinvest the dividends, right?
And with Apple and Google and Meta and a handful of other tech stocks just killing it every on every quarterly earnings report. Nobody wanted to bother with energy, but now that big tech is reporting lower earnings, laying people off, and having their stocks tank, all
Hmm.
of a sudden ExxonMobil and companies like that are looking pretty nice. So yeah, the relative market caps of those two sectors has basically met in the middle, with one tanking and one soaring. And it looks like energy is going to continue to rise going forward here.
Oh, yeah.
And we've talked about uranium too, which is a really interesting smaller part of the energy sector, but a really attractive one, because these same countries that are going back to oil and coal are also going back to nuclear, and there's nowhere near enough uranium to satisfy that potential demand. So the uranium miners are going to look pretty good going forward because the price of what they're digging out of the ground is going to go up. It has to go up enough to incent them to go out there and get those less economic deposits. So a portfolio of nuclear related stocks, it would probably be a winner the next 5 or so years.
Yeah, yeah, no doubt. I mean, energy for now is where it's at, unless the economy craters so much that our consumption goes down by 10% or more. Uh, this energy boom is going to continue. And I've actually got a sponsor that that I believe is poised super, super undervalued just send me an email. I'll send you the name and a write up on the company. It's KL@kerrylutz.com. But in the meantime, John, Elon Musk has conquered Twitter, and it looks like it's worth less and less every day. But I just have a feeling his brain, he'll turn it around.
Well, he's doing a lot of interesting stuff with it. Of course, a lot of sponsors are leaving because, for instance, a lot of the car companies were sponsors of Twitter, and they don't necessarily want to advertise now on a network that's owned by one of their main competitors. You know, this
Can't
Tesla
blame
thing,
him.
Twitter, but he's cleaning up a lot of the messes that we kind of took for granted, where like bots are everywhere, and there are all these fake accounts that weren't clearly labeled satire or parody, so you couldn't tell if they were real accounts or not. And so he's cleaning stuff like that up. And he changed the terms of that blue check thing, where it used to be that you had to qualify for it, and then apparently you had to pay under the table to Twitter employees before you
Up
could
to
get the
$15,000, I
yes.
saw somebody kickback paid, and that's totally
Yeah.
illegal.
Yeah. Oh, yeah. Of course. But now it's just going to be a pay, uh, a paywall kind of thing, where you pay $8 a month or whatever, and you get a blue check. And hopefully that comes with some verification that you are not a bot, you are a real account that has your name on it, and it's not a parody account or anything. It's really you, which is worth something in this world. So we'll see how it plays out. But they're changes that are kind of commonsensical. So they look like they're logical, and that in a logical world they will work. But we don't know how this is going to end up.
No, but it
I'm
sure as hell
noticing
is fun to watch, huh?
that a lot of accounts are announcing on their Twitter feeds that their subscriber base is soaring now that they took off the shadow bans.
Yeah,
They're letting people honestly sign up and be accounted for.
very
It's
true.
getting a lot more honest, and so by and large, I'm enjoying what he's doing. It looks like he's making an honest attempt to turn that into a legitimate platform. So we'll see.
And
So
let's
far, so
let's
good.
not forget he fired half the company over the weekend. You know, can you picture Elon Musk's to-do list? Uh, you know, Friday, first thing, get coffee, breakfast. Second thing, shut down bots. Third thing, fire half the company. Fourth, open up Blue Check to anybody who wants it, which I've applied for it, by the way, and I think everybody should, any content creator should, because it's got certain benefits, even at $9 a month. And I know I've been banned on multiple platforms, including the one that you are watching this show on now. I know I've been shadow banned. I even have the proof of it, but hey, it's pointless. I'm not complaining. Hey, it's never been part of my business plan to rely on these platforms to keep me fed. But point being that this guy moves at a pace that as fast as one of his SpaceX rockets, taking off for the moon.
Yeah, it really is fast paced. But Kerry, I've got a question for you and your audience.
Hmm.
When I owned dollarclaps.com, we had a pretty decent Twitter feed, but that went with the site when I sold it.
Hmm.
So I was going to set up a personal Twitter account, and I was looking around, and it turns out I did set up a personal Twitter account in 2009
Oh,
under
really?
my own name. But I tried to access it, and none of the email accounts that I would have had back then seemed to work. So I sent an email to Twitter asking them if they can help me.
Well, there's no one
And
left there to answer it, man.
yeah,
They're all
yeah,
gone.
exactly. I didn't hear anything back. I suppose they're kind of otherwise occupied with
They're
whatever.
not really worrying too much about John Rubino's personal Twitter account. They're worrying about like how they're going to feed how they're going to live for the next,
Yeah, okay, and I guess I can accept that for a while.
So you'll
But
have to wait. I'm sorry.
see, just in case there's a trick that I don't know, to get to that old dormant account, that would be nice. So if anybody knows how to do
Um,
it, let me know.
Try sending yourself a direct message on Twitter to yourself, or um,
Oh, okay.
yeah, like go to your thing and send a DM, and then see if it pops up the notification in your email. In fact, I could do that for you, and I will do that for you, and we'll see what happens.
Okay.
Um, there's got to be a way to recapture it, but if you don't know your email address, you're kind of you're kind of out of luck there, I think.
Well, yeah, I was hoping that Twitter has some way where they can go in and find some other information that I provided at the time or something and use
Yeah,
that to
perhaps.
verify me because it only has 4 followers
Mhm.
since 2009. So
Yeah, you've
it's
really
not
been
doing
promoting
Twitter
it,
any
huh?
good. Yeah, I mean, it's not, they wouldn't be stealing it
There
from
you
anybody
are.
else.
Well, it
It
looks
should be
like
just,
it's spelled wrong, though.
no, it should be just John Rubino.
It says at John, it's got your picture there, so somebody's misappropriated it.
Oh, really? And
Yeah,
but it's
there's
my
two or
name?
three of them there for you. Two people have got your pictures there. So you got to be at the real John Rubino.
No, it was just mine is just John Rubino with no picture, and it
I
has
see it. No picture, nothing. Well, you have 4 followers.
exactly. That's the
Um,
one. That's the one I think I set
all
up
right.
way
Well,
back when.
you got 6 followers now. I just followed you. And let's
Okay,
send
well,
you a DM. I'll send you a message of some sort and see if it notifies you. But you probably forgot about that email address anyway. It's probably like an AOL email
yeah,
address, John.
I don't know, or it could be one from dollarcollapse.com that has been deleted since then. So I'll look into it. But yeah, thanks for the follower.
Hey, well,
You
you're
increased
up
my follower base by 20%.
20%. Yeah, that's pretty good, you know? And I've got my notifications set, so we're good there.
All
And
right.
hey, so on to other news. Uh, Gold and silver on Friday. I hadn't seen a day like that in 10 years.
That was nice, wasn't it? It's
Hmm.
a taste of things to come, first of all, but how soon is
Yes.
the question. So yeah, gold was up $50 and silver was up a buck 30, something like that.
Yeah,
Really, really
$1.29,
nice
and
move
it's over
back and
20
forth.
bucks now.
Yeah, yeah. So nice move. And part of that is because there's some active buyers out there in the precious metals markets. On the gold side, central banks are buying gold at record rates, and there some of them are secretive. There's like this giant whale out there right now that
Mhm.
anonymously bought 200 tons of gold in the third quarter of this year. And that's pretty exciting because it means that there's a lot of interest from some very deep-pocketed people because central banks just they print the money and they buy the gold.
Yeah,
So no big deal for them.
it's a
And
good
then
deal.
on silver, the available silver ounces on the exchanges, which is where the people who want to buy gold and silver coins would eventually get their gold and silver coins because you have to buy the raw silver and turn it into ingots and turn those into coins. But that silver is disappearing at a very fast rate,
Yes.
and so a lot of people are speculating about whether the exchanges are just going to run out or come so close to running out that they have to do something like pay off futures contracts in cash rather than in metal, which would be an effective
Yes.
default. And what's that going to do to the silver price? Because if people realize there's no more silver out there, they'll get desperate, and that's such a tiny market. You could see from 20 to 50 on the silver price in a matter of days or weeks, just because it's such a tiny little, um, increasingly illiquid market. So that's very
True.
exciting, and that could be something that contributed to that big move on Friday. We'll see how it goes from here, but the charts are looking better and better.
Yep, that is for sure. And well, let's see. We talked about that. Oh, COVID amnesty. an article from Atlantic. So who gets the amnesty? Is it the people who were like banished? Do they get their amnesty, or is it the people who may have promoted certain policies that resulted in mass harm? I'm not sure what amnesty means here.
Yeah, apparently the people who ruined millions and millions of lives put our kids into learning disability
Mm.
categories by not letting them go to school, and flat out killed a lot of other people while posting all kinds of nasty stuff about the unvaccinated online with apparently total impunity. They didn't get banned or anything like that from any social media network. Now they want to be forgiven. They want us just to live and let live, and declare amnesty, and just move on from here, because you know what? We all made mistakes when we were operating with insufficient information back in 2020 and
Yes, we
2021.
did.
And so, okay, so there's an article in Atlantic magazine about this, and the um, comments section under every mention of this article, that it's hilarious. It sounds like pretty much nobody's up for the whole amnesty thing. They want an abject apology and hearings and serious consequences for the people who, depending on how they lied. Like, some of the people in the public health establishment lied in ways that led to actual deaths.
Hmm.
And those guys they don't get to walk away, and they should not get to walk away.
Definitely not.
And so anyhow, this is just a funny debate going on out there, because there's a lot of videos, parody videos now, of one twin sister asking another twin sister for forgiveness, and the other one going off on why there's no way that's going to happen, stuff like that. And it's a funny internet meme right now, but it also exposes a lot of the anger that's out there, because
Yeah,
the
good reason.
people who were skeptics turned out to be right on almost every aspect of this thing. And the idea that they should be the ones offering forgiveness, and trying to make life easier for the ones who are on the other side of this in really brutal ways in a lot of cases, that's not going to happen.
Shouldn't.
It's going to go on. Yeah, it should not happen, and it probably won't happen if the majority of the country has anything to say about it now.
Yeah, disgusting. All right. Well, we will leave it at that. So make sure you go over to financialsurvivalnetwork.com, sign up for your free newsletter. Got a question for John? Shoot an email to kl@kerrylutz.com. We'll get you an answer. And hey, go take a look at John's former site, dollarcollapse.com. His articles still appear there periodically. Got one there now. And John, we'll talk to you in a couple weeks. Be well.
Thanks, Kerry. Before we go, I want to publicly thank my dogs for not making any noises. I don't know if you can see
Yeah,
them back there, but I
they're
have two
there
dogs.
back there on the bed.
They're
Yeah.
they are sleeping right behind me in this little converted bedroom here. And
You
I was
drugged
waiting
them.
for them. I was waiting for them to go nuts all of a sudden here, but they didn't. So
They look
thanks,
drugged.
guys. Appreciate it.
They
Uh,
look
you
totally
know,
drugged.
if only I could get away with drugging these guys, but my wife doesn't believe in doggy downers, unfortunately.
Ah, holistic dog
Yeah, yeah,
veterinary medicine, right? I'm in favor of
yeah,
it. All right,
yeah.
man. Hey, we'll talk to you in a couple weeks. Be well.
Yeah.